Hi everyone. In this video, I will share two strategies I believe are reliable for making continuous profit over the long term. In my previous video, I laid down some rules that was required for anyone interested in trading binary for the long term. If you haven't seen it, I advise you do before watching this video. I will try and make this video as short as possible. So let's jump right into it. In my previous video, I mentioned how binary options could be used to your benefit in taking advantage of both breakouts and fakeouts. This setup on the daily euro to US dollar chart suggested a breakout from the channel to the upside. It however reversed back into the channel. Forex traders would have lost on this trade, but binary traders would have made a profit before the reversal happened. This isn't a strategy I use currently, because I haven't taken time to master it. Theoretically it is brilliant, but I first need to experiment with it through backtesting to get it to work for me. On that note, I would like to state that, even though I am sharing a strategy in this video, I believe in creating one's own strategy. I think everyone should study the principles in trading, then apply these principles in creating and mastering a strategy. This is the best way to go in my opinion. Now let's talk about the engulfing strategy that I mastered and made to work for me. If you are familiar with the engulfing pattern, you would know there are different setups. This is, however, the one I believe provides the highest returns. It works perfect on hourly charts. So this is how the setup looks like. Firstly, on a 1-hour chart, there should be a strong movement to either the downside or the upside. In this illustration it is to the downside. Secondly, the last red candle before reversal should have wicks on both the top and on the button. Thirdly, the next candle should be in the opposite direction, a green candle in this case, and it should have totally engulfed the previous candle. And more importantly, it should have a wick on the bottom. It should be a fairly significant one, not a tiny wick. If this setup happens, then take a call trade with a 1-hour or 2-hour expiry. Personally I go for a 1-hour expiry, and go for a recovery trade if it fails. These are all valid setups. The downside movement shouldn't necessarily consist of only solid red candles. You just need to determine if it's a strong downside movement. And for this there was a gap down. That gives an even stronger confirmation for this setup. Even though the setup works great anywhere on the chart, it works better when it's at the boundary of Bollinger Bands. When prices reach the boundary of bands, it indicates price have reached overbought or oversold positions. Since the engulfing strategy is a reversal strategy, if the setup occurs near or at the boundaries of the bands, it's a strong indication that price is about to reverse. These setups are not perfect but valid. There is a little wick on top of the green candle. As long as the lower wick is significantly longer than the top wick, it is a valid setup. For this, the last red candle before the reversal started has no upper wick, but only a lower wick. This also is a valid setup but not the strongest. Now, if the first reversal candle makes a strong movement to the upside, engulfing a number of the previous candles, I strongly advise you abandon this trade and wait for another setup. This is because the entire reversal might have occurred in the single move, and there might be no more momentum left to continue the movement. Also, it's important that the downside movement is a strong one. This example for instance is not a strong downside movement. Lastly, even though the examples provided were reversals to the upside, the strategy applies also to reversals to the downside. These are two setups. They are both perfect setups. Here, although all the candles are not green, it is a strong movement up. Here it's a strong downside movement, with 5 red candles before the start of the reversal. Here, the market is generally on a downtrend. There is a powerful downside movement, then the engulfing candle appears. And this is why I love this particular engulfing strategy. It works even in trending markets. After the engulfing candle, price went up for an hour before continuing on its downtrend. Here, the first reversal candle had a little wick on top. As early explained, this is still a valid setup. This too is a valid setup. As you can see from the examples, this engulfing strategy is strong. But like for every good trader out there, you need at least 3 well-developed strategies. I advise you master how to trade this strategy, and make it part of your 3 strategies. My other strategy is the momentum shift strategy. With this strategy, calculation is required. It's quite unusual. I know. Most strategies, like the one we just discussed, depend on viewing candle patterns. But this is quite straightforward, and that's why I am very confident trading it. This is the formula used to determine when to enter trades. Just like indicators, this strategy is based on calculations using price movements. But while indicators only tell you how price moved in the past, this formula tells you how price is moving now. Due to the nature of the strategy, it's easy to scroll back the charts and determine when it has worked and when it has failed. This is because, unlike strategies based on candlestick patterns, there is no ambiguity to what a valid setup is. This is compiled data on how the strategy performed in the last 12 months, with date and time each setup occurred. This is for only the pound dollar and the euro dollar. Assume 10% of $1,000 is risked on each trade at 82% ROI. This are the monthly returns of the last year. An average of 57% monthly profit is not so bad for just one strategy, on just 2 currency pairs. This is my strongest strategy, and I'm sorry if I can't share the parameters used in the calculation. Unfortunately, I believe there is such a thing as broker manipulation. So I fear making the formula popular might end up being a disadvantage to me in the long run. I however hope this inspires you to create a similar strategy, based on pips movement rather than candle patterns. But, if you believe you have a personal strategy that's really strong, I'm willing to exchange strategies. My Telegram ID is in the description. As I said earlier, I believe in creating your own strategy. I hope this video helps you master your own strong strategy, so you can trade with confidence all the time.